Thank you for joining me this Friday, the 2nd of February. I'm Grady, market analyst with Bell Direct, and this is the weekly market update. This week was arguably the biggest week on the US reporting season calendar, as we saw 6 of the Magnificent 7 release quarterly results that made waves on markets. The Nasdaq Composite fell 2.52% over the 5 trading days to Thursday, so why were investors not impressed with the tech-heavy index this week? For those who don't know the Magnificent 7, it is the big tech names, including Amazon, Apple, Google parent company Alphabet, Meta Platforms, Microsoft, Nvidia and Tesla. As of the 3rd of January 2024, these 7 global tech companies had a combined value of $11.7 trillion US dollars, which is equal to the UK, Japan and Canadian stock markets combined. The tech titans delivered returns of 107% in 2023 and accounted for most of the gains on the S&P 500. While the Magnificent 7 were expected to have year-on-year earnings growth of 53.7% for Q4, we have seen mixed results so far. Investors piled out of Tesla shares this week despite the EV giant posting stronger than expected fourth quarter results, including company-wide operating profit margins and automotive gross profit margins rising quarter on quarter. Investors were more concerned about Tesla's warning of headwinds to come amid the expectation of lower vehicle volume growth for the year ahead. Microsoft followed suit, topping expectations across all metrics and posting significant growth on FY23, including total revenue of $62.02 billion US dollars compared to expectations of $61.1 billion US dollars and well above the $52.7 billion US dollars reported a year earlier. Following the results, Microsoft shares jumped over 1.5%. Alphabet shares, on the other hand, fell over 6% this week after the Google parent company reported Q4 results that did beat expectations across the board, but investors sold out amid disappointing ad revenue. Apple shares fell 3.13% in after-hours trade on Thursday following the tech giant's release of results. Despite topping Wall Street estimates, lower services revenue and declines in the company's Chinese operations weighed on investor sentiment. Meta shares soared 14% in after-hours trade after the Facebook parent company, also beat expectations in Q4, with revenue topping $40 billion US dollars and AI product development exciting investors in the tech space. Meta also won investors over by announcing its first ever dividend of 50 cents per share. Amazon rounded out 6 of the Magnificent 7 tech titans on Thursday night, with reporting a 27% lift in its advertising business to $14.65 billion US dollars for the quarter, in addition to a 14% rise in overall sales to $170 billion US dollars. The results topped Wall Street's estimates, topped Google's and Meta's advertising revenue, and the company announced the launch of AI advertising tools. Shares popped over 7% in after-hours trade. Nvidia, a world leader in AI computing, is set to close out the Magnificent 7 results by releasing theirs on Feb 21. While all 6 of the tech giants have beat Wall Street expectations so far, the key learnings thus far are: headwinds will always cause investors concern, for example Tesla. AI is driving growth and ad revenue is a key metric of success. So the question now arises, just how far can the tech titan valuations go before the Magnificent 7 turns into the magnificently overvalued 7? Locally, we are preparing for a bumper earnings season for the first half, and expectations are for cost inflation impacting margins, lowered profits for the big 4 banks as net interest margins may have peaked and switching is on the rise as Aussies continue searching for the best option for servicing their home loans. At the same time, we are experiencing net interest margin increases for the smaller banks, which was the case for Judo Bank this week as it soared 16.8% on a 24% profit before tax jump for the first half. Retailers are expected to report headwinds as we enter the second half of 2024 financial year amid declining retail spend and the concept of higher interest rates for longer. Iron ore miners will be on watch this year as the price of iron ore has held up, but China's declining economic state has weighed on sales of the key commodity. And on the tech front, AI is still the word, but profitability is an investor's core focus. Any companies approaching profitability will garner investors' to support this reporting season. Locally, from Monday to Thursday, the ASX 200 rose 0.43%, including closing at a record high, as a surge in energy and REIT stocks boosted the key index into record territory, while industrials and tech stocks weighed on the market gains. The winning stocks over the 4 trading days were led by Megaport, soaring 32.34% after the cloud connectivity provider impressed in the latest quarterly update. Nickel Industries followed suit, jumping 30%, and Tabcorp rounded out the top 3 winners on the ASX 200, rising 14.29%. On the losing end, Gold Road Resources fell over 14% this week after releasing a quarterly update, including lower production quarter on quarter due to delays accessing higher grade ore from the company's open pit, alongside labour constraints that impacted performance. Weebit Nano also tumbled almost 10% this week after releasing a trading update, and Regis Resources fell 8.56%. Taking a look at the broader index, the All Ords also rose by 0.43% this week, led by BetMakers soaring 42%, Rhythm Biosciences jumping 36.36%, and Select Harvests adding 31%. On the losing end of the All Ords, 29 Metals tanked 45% after the copper producer released a disappointing quarterly update. Calix also fell 27% and Gallon Lithium tanked 24%. The most traded stocks by Bell Direct clients this week were Navigator Global Investments, Infratil, Polynovo and Macquarie Group. Clients also bought into Woodside Energy and Pilbara Minerals, while taking profits from Fortescue Metals, CBA, CSL, and BHP. The most traded ETFs, from Monday to Thursday were SPDR S&P ASX 200 Financials XA REIT, iShares S&P 500 ETF, and Vanguard Australian Shares Index ETF. Looking to the week ahead on the economic calendar, Australia's trade balance data for December is out on Monday, with the expectation of a drastic decline in trade surplus from $11.44 billion in November to a surplus of $7.9 billion in December. The RBA will also hand down the nation's cash rate on Tuesday, with the market pricing in a hold at the current rate of 4.35%, despite recent CPI data falling to a 2-year low this week. Overseas, China's inflation rate data is due out on Thursday, which will give key insight into the exact state of the economic recovery in the world's second largest economy. And that's all we have time for this week. Have a wonderful weekend, and as always, happy investing.